Hello, my friends. Brett Pattison coming at you from the financial capital of the West Salt Lake City in the new Iron Gate Global HQ.
It's pretty nice.
Yeah, we're in a makeshift podcast room today. We're really getting better, I think, or going to be better with the new podcast media room that we're building. But we're here today. Great to see you, Brian Hunsaker.
It's good to see you.
The chairman.
Yeah, good to see you.
I've got a fun podcast. We've got a fun podcast today. And a fun game that we're going to play with clients of Iron Gate Global. Your chance to win $500, which is kind of fun.
Yeah, it'll be fun.
Before we do that, let's talk about, because we're closing out the year, this will be the last podcast of 2022. So let's review the year. Right now,
It's been quite a year.
oh, it's been a hell of a year.
It's been a tough year.
And we say that because the NASDAQ, as of today, down 31%. The S&P 500 down 18.7%. 20-year treasuries down almost 31%. Corporate bonds down 13.6%. If you're holding cash, down 7.5%, 8%. Everything has been just slacked.
And that's from inflation, just loss of purchasing power.
Yep.
Right.
Yep,
Yeah.
just from inflation, holding that cash. So it's been a very tough year. And in typical bear markets, you can find asset classes that are doing well, right? Typical bonds to stocks, for example. This year, everything got clobbered.
Yeah, it's been a tough year. One of the toughest years, I think, across the board. As you said, every asset class is down, and that's unusual. And in fact, bonds have been particularly hit hard this year, and that's really unusual. Usually, when people think of bonds and fixed income, they think, "Oh, that's conservative and safe," but the numbers you just showed us, it's been a really tough year to own those supposedly safe bonds, fixed income.
In my 20-year career, toughest year I've ever seen.
Yeah, I think across the board it's been tough. Yeah.
Yep. All right. Everybody knows it's been tough. But let's go back in time, because I want to share with everybody some predictions that were made in December of 2021.
This should be fun.
Okay? Were people able to forecast the bear market that is 2022? All right. So, in December of 2021, the S&P was at 4,800. Okay? Today, it's at 3,914 for a data point. It was at 4,800. Credit Suisse came out and said our 2022 target is 5,200. It's going to be a good year. Goldman came out, similar, 5,100 price target. JP, 50-50. So most firms had a pretty solid 2022 as far as what their forecasts were. The Fed funds rate was at 0%. The Fed, early in 2022, said about inflation, it's transitory. No worries. Okay? That's how we started the year. Everyone was feeling good. And then what happened?
Yeah.
Go ahead.
Well, then inflation happened.
Yeah, then inflation happened. All right, so
Well, inflation was more persistent than anybody expected, or most expect, especially the Fed. Inflation was rearing its head this time last year, but nobody thought it would be as persistent as it has, and which is crazy when you think about. I mean, all these firms, J.P. Morgan, Credit Suisse, Goldman Sachs, these are iconic financial,
very smart people.
very smart, very, very smart people, and that just tells you how difficult it is. Then you have the Federal Reserve with, they have hundreds of
over 400 PhDs, isn't it?
PhD economists,
Yeah.
and they got it completely wrong.
The only people that got 2022 right were those that are always bearish. And every year the country's going to collapse, and get your helmet, your ammo, and hide in the mountain. Those are the people that got it.
Yeah.
But they're wrong.
90, nine out of 10 times.
9 out of 10 times.
But every once in a while, they're right. It's like a
broken clock.
broken clock.
Yeah, exactly.
Yeah.
So that's what happened, and that's what we heard going into 2022. Okay. Now I want to focus on what those same firms' price targets are for 2023, and then I want to focus on Brian Hunsaker's market outlook.
Yeah, listen, take notes.
For 2023. This is going to be great.
Yeah.
All right, so Credit Suisse. Remember, last year 5,200. This year, S&P right now 39.14 as a reminder. They say we're really not going to go anywhere. We're going to be at 40.50. Okay? Goldman 4,000. JP 4,200. The average forecast across all banks is 39.70. So everybody and their dog is expecting a bearish to neutral year.
Yeah.
Now, here's what the Fed's saying. Remember, Fed started 2022 out saying 0%, we'd like to raise a little bit. Inflation, not a big worry. Now, going into 2023, inflation, biggest worry we've had in, since the 70s or 80s. And the Fed funds, we're going to keep our foot on the pedal and gas it. Right now, Fed funds is at 4.3.
Speaking of the Fed funds, I think a year ago, and I wish I would have researched this before our podcast, but I believe the year-end target for Fed funds, maybe you remember this, a year ago, I think was less than 2%.
Yeah.
The year-end target by the Federal Reserve was less than
1.25%, 1.5%.
Yeah, something like that.
Yep.
Yeah. And right now, the year-end target for next year is 5.1.
5.25%.
Yeah, 5.25, somewhere in that range.
So, but remember, the Fed last year, all is well. The Fed this year, the house is on fire.
Yeah.
We're at 4.3. Expect another percent on top of that, is what the Fed is going into the year saying. Just like what all these banks are saying. Average price target on the S&P 39.70. What? We could go back to 2021, 2020, and that's kind of a weird year, but 2019, all the way back, and we will find similar numbers. And I don't know, is the word wrongness a word? Because everybody's wrong.
Well, and I just read an article in the journal recently. In fact, I think it was Friday or something, just really recently, talking about this very subject, about how it's just human nature when we think about past predictions, and it's just natural that we're going to be influenced by what's happening today, what just happened over the last year. And in fact, this article was talking about, in fact, he did a poll a year ago, this article, and then he went back and asked people, do you remember what your prediction was for the year? And they all thought, oh yeah, they all thought we're pretty close to where we are now. They were all way off. I mean, yeah, they were influenced by what's happening right now, and we kind of fool ourselves, actually.
So we're going to get to our game that we have for clients here in a minute, but I want to give one more data point, and then I want you to talk about your market forecast for 2023. Okay, and this is actually not one. This is not 1 year or 5 years. This is going back to 1939. Okay? I love market history. I look at it all the time. You know that. I'm always texting you historical numbers that you're probably sick of getting.
Probabilities. And
it's a game of probabilities to me, right? That's how I trade options, is probabilities, and that's how I look at the market, is the probability of making money. Since 1939. Okay, we're looking at the third year of a president's term. Okay, so think back to 1930, how many presidents we've had since then. And since then, 1939, the third year of a president's term, there's been one down year. And that was in 2015, down 2%.
Yeah, wow.
So if you're playing probabilities just based on history, there's a 94% probability that we're going to be higher.
Yeah. It's right.
Is that in their price targets?
Yeah. It's right until it's not, right?
But there's a 6% probability that that's wrong.
Yeah.
And trust me, in the game of options, I've had 6% probabilities go against me.
Probably more than 6% of the time. That's the strange thing about probabilities.
Yeah.
They're right most of the time.
Okay, so with all that in mind, right? All these banks, history, what the Fed has said, pedal to the metal, we're not stopping. Expect it to be longer or higher longer. By the way, they raised rates the highest in the history of our country this year. It's insane. All that in mind.
Going from zero Fed funds to
4.3.
Where we are today. I've never seen that.
It's nuts. It's never happened.
I've never seen it in my career, so it's been a long time. And with all these data points and all these really, really smart people and with a lot of credibility, J.P. Morgan, Goldman. I mean, these guys just didn't fall off the turnip truck yesterday.
Yeah.
So with that said, that's just the way it is. Predictions are I don't even want to say they're hard. They're impossible. It's impossible.
Katie, I think he's chickening out right
No,
now.
I'm gonna I have an opinion. You know they say about opinions. I have an opinion.
Okay.
And so take it for what it's worth. I take it. Here's the thing about opinions. I take it for what it's worth too. I know that everybody's opinion. It's not so much whether or not you're going to be right. It's how far are you going to be wrong. Really. That's really what it comes.
All right. So tell me this then, because when you're managing hundreds of millions of dollars as we are, how with all of this information that we have and price targets and forecasts and all this kind of stuff, how are you looking at 2023 in putting client money to work to compound their wealth? What are we going to do in 2023 that's different in 2022 and 2021 and going back?
Yeah. The thought came to me as you're asking this question, Brian, how can you talk about have so little regard for projections or opinions or predictions, and manage hundreds of millions of dollars, and my answer to that is predictions over a short period of time are very, very difficult. The longer the time frame, I feel more confident, and I think history would bear that out too. Over time, and there's a lot of reasons we've talked about it in the past about how markets work and why I feel confident about markets growing and profits growing over time. But over the short term, those things are very unpredictable. So that's how, when I think about putting money to work, I'm always thinking in terms of really 3 years from now. I feel confident. The longer the time frame out, say 3 years, 5 years, the more confident I am in my projections. Not really, I don't call them predictions, but I feel optimistic and very, very optimistic about the portfolio of companies we own, and that over time they're going to do well. But what's going to happen this next year? Are we going to have a recession? I don't know. I think that's consensus that we are going to have a recession in the next year. Mm-hmm. Okay, want my prediction?
Sure.
No, we're not. I don't think we're going to have a recession next year.
I like the optimism.
And but
we're contrarians too.
That is consensus. I think almost everybody that I've heard says that we're going to have a recession.
Recession and a 39.70 price target is the average, 100%. That's
which
what
is
everybody's saying.
Basically flat year.
Yeah.
Flat year. I'm predicting we might have one, maybe one negative GDP, but two. I'm just saying that I think the economy is strong. I think unemployment's low. I don't think there's going to be. I think there's going to be some layoffs, but I think the people getting laid off are going to find jobs, and I also think, maybe I'm just Goldilocks. I'm just, I think inflation is going to come back down significantly. I don't think it's going to be where it was, pre-COVID or anything like that. I don't think we're going down to zero or less than 2% inflation rate. But I think inflation is going to come down. I think interest rates are probably about where we'll be by the end of year, maybe a little higher on the 10-year. So
10-year right now, 3.6.
Yeah, 3.6. I mean, I wouldn't be surprised if it gets to 4. I don't think that kills the market. I think so I'm pretty optimistic
about 2023.
About 2023.
So here's the thing.
But here's the thing. I'm not predicting a 20% up on the S&P next year. I would say if you made me put a number to it, we're at 3,900. Yeah. Oh.
Don't.
No, I'm not going to
say that.
Oh. Can we cut that out? Shoot.
But here's the whole thing with forecasting, and this is what I love about how we've built Iron Gate. It doesn't matter. We're buying great businesses at great prices that have competitive advantages, great management. That's what we're doing.
Right.
And whether we think the market's going to be at 3,900 or 4,900, the process does not change. The discipline does not change. So it's fun to talk about, and opinions are okay to have. But it's about buying good businesses at good prices.
Right. That's absolutely what
it's about. That's how you compound your wealth.
And we don't do one-year financial plans. I mean,
I haven't seen one yet.
We just don't do them.
No.
And we don't do 1 year or 6 month, stock investment, portfolios.
Yep.
I mean, the portfolios we are building them for the next decade, for the next 5 years, the next 20 years. And those are the kind of portfolios. So we have long investment horizons. If someone comes to me today and says, Brian, I want you to put together a portfolio on stocks you think are going to do really well this year, I can do that, but I wouldn't recommend it. I wouldn't recommend it.
I trade options short term, but that's just based on probabilities.
You're doing
totally different.
High probability trades. Stocks are long term, really long term investments.
So here's the thing that we want to present to our clients, and we're going to join in too. And that is, we're going to put $500. The winner gets $500. And here's the game. The S&P right now is at 39.14. If you're a client of Iron Gate, we need you by January 6th to email Katie at IGGA, Katie at IGGA.com, your name and your S&P 500 prediction. Where is the S&P going to be on December 31st of 2023? Whoever's closest will win $500.
Yeah.
We want to see what our clients are forecasting. I want to see if our clients are smarter than Credit Suisse, Goldman, JP, Deutsche, name a bank.
Yeah, Merrill Lynch. I mean, it's just a fun thing.
Yep, and we're going to be in that too. Brian, ignore what Brian said.
No, because Katie's gonna block it out, so we'll be fine.
39.14 is the current price on the S&P. Send your forecast to Katie at IGGA.com.
Yeah,
and we'll see who's closest.
It'll be fun. Yeah,
and the whole point of looking back at 2022 and discussing what could happen in 2023 is that ultimately, and here's the thing, just nobody knows.
No.
Nobody knows what's going to happen. It's fun to have an opinion. That's why a discipline and the Iron Gate process are so critical. to
Yep.
investing and building your wealth.
Yeah, yeah. There's a quote by Howard Marks which I really like. Those who listen to our podcast know who Howard Marks is, and we